look, we continue to see Wall Street scaling fresh record highs. The Nasdaq now at its highest level in 3 months off the back of the outperformance that we're seeing in tech and chips. What else is driving this?
Yeah, I think let's talk about tech for a minute, and then we'll talk about what else is driving it. I think, when we turned incrementally positive in the US a few weeks ago, our view was that tech, which had been underperforming for a couple of months, is going to basically be the leader of the rebound, which, we're clearly seeing. But again, I would say it's still limited to a few tech names. What I think is very interesting incrementally is that financials are breaking out into new highs. And that was clearly led by the numbers that came out on Friday by JP Morgan and Wells Fargo. But I do think that financials are looking very interesting in addition to growth equities, which includes tech.
Indeed. And of course, earnings season rolls on. Are you encouraged by what you've seen from some of the major banks reporting so far? Is this a sector you want to be exposed to?
Absolutely. Look, I think, financials, if you look at it relative to the S&P, have kind of gone nowhere. But in absolute terms, I think the breakout into new highs looks very attractive. I think there was widespread expectation on credit losses getting racked up as the economy slows down. Now that we're looking at an economy that just seems to be humming and hawing, I think it's good for the bank earnings because we've seen the credit costs remain relatively muted. And I think the biggest upside really is coming from the positive net interest income guidance that we've received so far from the banks.